This is Robert Kraft, and I'm your host on SNN Network. And joining me right now is David Kivitz. He's the chairman and CEO of XS Financial. It's a publicly traded company. I got a couple symbols for you: XSF on the CSE and XSHLF on the OTCQB. And you can actually see David give a presentation at our upcoming virtual event, the SNN Network Summer Virtual Event 2021, happening August 17th through 19th. To register and see his presentation, please go to our website at conference.snn.network. With that, David, thank you for joining me today. How are you doing?
I'm doing great, thanks. Appreciate you having me here.
It's great to have you on. So this is our first time doing an interview together. So as is kind of the tradition here, I'd love to start off with a quick overview and history of the company.
Sure. So, XS Financial is providing equipment financing at scale to some of the largest U.S. cannabis operators. And we've really approached and focused on that market due to the fact that there's not a lot of capital availability for our customer base. And so we're providing a service that's unique. We've built a capital structure that is intentionally designed to participate in our industry. And we've built out both a customer base that is quite literally some of the largest companies in the entire industry and very creditworthy borrowers, and also partnered now with over 200 different equipment manufacturers who we work with really in a tri-party relationship. We finance the equipment that they sell to our customers and sit in the middle to help facilitate those transactions. So it's been a good business thus far. We're growing exceptionally quickly, and we're excited about the opportunity that's in front of us.
Very good. So tell us a little bit about the competitive landscape. I'm assuming that, this is a problem that almost all operators are probably dealing with. So, what does it look like right now? What's kind of the growth prospects? Because I'm sure the growth prospects tie into, their need for more equipment.
Yeah, that's right. So, the dynamic in the US right now is one of federal illegality and state legality in certain markets. And so what that means is interstate commerce is just not available to these businesses. And you couple that with the fact that a lot of capital can't come in and participate in the space because it's federally illegal. And you have a need to set up infrastructure in every state that you're, ultimately producing product, selling product. So you have to manufacture it, cultivate it, retail it on a state-by-state basis, which means you have to set up a significant amount of infrastructure. It requires a large amount of equipment. And for the largest players in the industry, they're looking to create standardization across all their markets. So they want to find automation. They are constantly, evolving their SOPs and the equipment that they're using to produce the end product. And so we're really sitting at the intersection of that, which is helping them finance all of these things, providing what we think is straightforward, transparent, and pretty traditional equipment finance. But we are funding a lot of the things that they need, and it's the second largest need that they have next to real estate. And that's everything from vehicles to food processing equipment, testing equipment, HVAC, irrigation, cultivation equipment, lighting. And so it really does span the gamut given what these guys are doing and all the different verticals that they're participating in. So we think it's a very large opportunity. Right now, companies are thinking about solving it in a couple of different ways, primarily using equity to pay for equipment, which, for a host of reasons, we think is not a great use of capital for them. And I think, given who our customer base is, and we are serving some of the largest companies, having a conversation with them and offering them the product that we have has actually been pretty well received in the sense that they know that's not the best way to finance their equipment purchases. And so now that we're on the scene, we're providing capital at scale. I think we've done a very good job of bringing something that they need to them and really listening to what they need as a result, and ultimately crafting our product to match that need. So right now, we haven't seen any direct competition in terms of what we're financing. Part of that, again, is all these partnerships that we've put in place with these equipment vendors that they work with and that we work with, and it's built a bit of a moat around the business. So there's certainly other capital in the space, albeit not enough. And in our specific vertical, there really isn't any direct competition at scale.
And what's your background? I mean, how did you come into all this?
Yeah, so I started my career on the institutional side with an investing role at a structured finance business called Capital Source. From there, worked kind of traditionally in an institutional private equity firm, again on the investment side. before working for a family office in New York. And when the housing market crashed, the president of the firm that I was working with and I moved out to California and saw it as a real opportunity to put on the entrepreneur and principal hat for the first time and started acquiring distressed master planned housing communities. So we were buying the communities that had been infrastructured, but the homes hadn't been built. And when they fell into the crash, or crashed as a result of the crash and the banks took back all of the communities, we started acquiring them from the banks. We actually launched a full-scale production home building company to build out all of the subdivided finished lots that we had acquired, and built up a pretty sizable regional home building operation as a result. What I'm doing now has a very similar, albeit slightly different industry than why I decided to go and become an entrepreneur and take my first principal opportunity in real estate, which is we got into real estate when it was a good time to be a buyer. And we feel that right now is a good time to be doing what we're doing in cannabis, where it's not overly competitive. There are not a ton of companies deploying capital, and there's really nobody doing what we're doing. So for a host of reasons, we think it's a big enough opportunity set to turn it into a significant sized business. And that's really ultimately how we got into this and figured that out. So we saw that nobody was addressing the equipment financing need. There were a few players addressing real estate. And so we thought we would kind of go to where there was less competition. And so far we've been well rewarded for that.
Very good. So with that, from what you can tell us, what would you say are some of the company's value catalysts now moving forward?
Yeah, it's an interesting sector. People tend to trade the exuberance surrounding federal legality or maybe a SAFE Act passing, things like that, which for most investors, I think, is really what they're looking for. I think, those of us who are in the industry, and obviously us who does a deep dive on the credit profile of these businesses, they're building pretty sizable concerns irrespective of federal legality. And in a lot of cases, the dynamic that exists right now is actually helping them, because it's keeping a lot of other big established companies from coming in, or if they come in, they're really coming in through them, investing with them, partnering with them, what have you. So it's a mixed bag in terms of whether or not federal illegality is ultimately beneficial to the industry or not from a near-term perspective, long-term certainly. But I think these companies are starting to produce very interesting financial performance numbers. And as a result, I think they're worthy of investing in now, because the multiples are already, what I think is fairly inexpensive relative to other industries. And once federal illegality comes, there should be a significant amount of fresh, financing that comes into the space, which should make things a tad more competitive for us, but at the same time should open up the door to significantly more financing for our business as well. And given that we operate a business that largely, is a finance company and looks like what banks and other finance companies do, we think ultimately that's going to give us, significant tailwind. So, I think for all of those reasons, the industry is very, very interesting to look at now. And of course, once legality comes into play, I think you're going to see valuations start to really jump.
Very good. Well, David, with that, where can our audience go and find more information about XS Financial?
So go to www.xsfinancial.com or reach out to any of the company representatives, myself included. Always happy to interact with investors, talk more about the business, give our opinions on the industry, and certainly look forward to participating in the conference.
Very good. David, thank you so much for joining me today. I really do appreciate it. Good luck, stay safe, and I look forward to our next update.
Thanks so much. Appreciate the time.